Hi, everyone. My name is Alex Daredia. I work for Century 21 out here in Bakersfield, California. I help people buy, sell, invest in real estate. And this is something I've been wanting to do for a while, interview people, share their experience in the industry, client stories, what's going on in this industry, and specifically speaking, real estate lending world, right? Because I'm rooted into it. So I have here with us today, Damaris. Thank you for taking time out of your day on a Sunday morning. Means the world to me. Thank you so much.
No, thank you for having me. I'm excited to do this.
Yeah, right. No. Hey, thank you. I really mean it, So tell us about yourself, right? What do you do? Why real estate as a career in general? And then specifically, why lending? Right. So, yeah.
Yes. Okay, so my name is Damaris Castillo. I am a mortgage broker with Dream House Lending, and I have been doing this for 3 years, originating for 3 years. But I started in the industry back in 2015. I started as a customer service rep, and you know what? I moved from LA to Bakersfield at the end of 2015, and I was just looking for a job. I was doing accounting back in LA, and then when I moved to Bakersfield, I needed a job. I needed to start new, fresh. So I applied at this agency, and they found me a job at this mortgage company as a customer service rep. And then, I liked it. I was like, I can build a career out of this.
Okay, so you always 7 years is what it sounds like. 25.
Yes. Mm-hmm.
Wow, 7 years.
So I did, So I did customer service. I did processing for a little bit, and then I was a loan officer assistant. Then after that, I got my license. Well, actually, I got my real estate license before I got my lending license. And
so let me pause. So why? So numbers been your background's been like in accounting, number related type of a situation.
Yes.
So. Mm-hmm. Yeah. So now my question is why not real estate sales, right? Because I sell for a living and I absolutely love it. So why not that, and why lending?
You know what? I did try to do real estate, but just the driving back and forth, showing properties, it just wasn't for me. Trust me, I love real estate in general, but
obviously
I think I'm more like I'm comfortable in my office. People come to me, I sit down with them, I have a nice conversation with them, I build those relationships and numbers, and then I help them structure their deal. It's more like I'm passionate about lending.
You're passionate about numbers and lending.
Yes.
Wow. Yeah, I don't
building cases because that's how I see lending. It's like you're building a case. Yeah. You're selling your case to the underwriter. Okay, like there's tough files that we have to figure out how we're gonna make them work. Yeah. And I just love that. Those are my favorite files.
Yeah. No, I don't know if I want to say tough files are my favorite files, but I feel like they feel very, very rewarding at the end.
Yes.
So I completely agree with you. So what the hell is going on in the market? I mean, I know the sales are, we're still selling about 150 homes every week on my end of the world. The rates are all over the place, and you can tell us a little bit about that. There's significantly more inventory in the market now, right? You're looking at close to 1,000 homes where it was almost maybe 80, 90, or 100 homes at one point. So what is going on your side of the world?
Well, obviously the market has shifted. It's a little bit slower now. It's hard to qualify buyers because of the rates. The rates are high, but they're not extremely high. So people got used to the low rates back in 2020, part of 2021. They were super low, but that was because of the pandemic. Okay. So now rates are a little bit higher.
Can you put it in like numbers perspective? Like,
yes,
people that don't know, right? Like,
so okay, let's say 2020, 2.5 for an FHA, high twos for a conventional. Now FHAs are high fives, conventionals they're in the 6%. So yeah, it makes a difference. But
so how much do you think a payment would have gone up from like, hey, a 2.5%?
2.5%.
So now,
okay. So for instance, a property for 500,000 back in 2020, probably the payment would have been like 2,600. around there.
Okay.
And now we're looking at probably in the low 300s for that type of payment. So it has changed a lot.
Okay. So the buying power has gone down significantly.
Probably by 30%.
Yeah. I mean, I'm not no mortgage broker, but I was doing some numbers, right? A 5% down with current market interest rate on a $400,000 home, principal, interest, taxes, insurance, the whole shebang, was about, I want to say $3,200. And I was like blown away because that's a steep monthly mortgage payment, right?
And that was the monthly payment for a $600,000 home back in 2020.
Yes. So okay, so let me ask you this. So people that bought houses in 2020 with the lower interest rate but higher prices, what are your thoughts about that?
They did great. I mean,
why? Why do you think that is?
People that take advantage of that. I mean, if they're planning on staying in that particular property for 5-10 years, then that's great because they're going to be saving in their interest rates. And I mean, have you seen like a huge difference in the pricing of properties compared to 2020 to now?
2022 now. Yeah, I mean, look, properties that I sold in 2020, those properties have gone up 30 to 40% year to date up to now.
Yeah.
They're trending downwards a little bit or flatlining, I want to say, because the interest rate is so high. So those properties have gone up. But so what about people buying today with 6%, 5% interest rate? What do you have to say to those people? Is it still
I mean, this is what I tell people. If it makes sense for you, it's a case by case. If you're renting and if you're paying $2,500 for rent, and you're gonna purchase a house and your mortgage payment is gonna be probably just a couple of hundred more, it makes sense because you're buying, you have an asset
like
versus renting. I'm sorry?
Like a big piggy bank.
Right. So if it's only a couple of hundred and you can afford that payment, go for it. And again, we've been hearing that saying, marry the house, date the rate. You can always refinance. If the rates drop, you can always refinance. But what I've been telling my borrowers is like, just keep up with your credit. Don't let it go. Because sometimes you buy a house and okay, I'm not gonna need my credit anymore, and I'm just gonna do these crazy things. I'm probably gonna forget to make my payments or get into more debt. Don't do that. Just keep your job. Keep your, if you can get a better job, great. Keep working your hours. Take care of your credit. So when the opportunity comes to refinance, then you take advantage of that.
Wow. So you see a lot of people let go their credit after they've gotten into a mortgage?
Yes. You know what? What was that?
Why do you think that is?
Well, I mean, they get excited. They start buying cars. They start buying stuff for their house. And there's nothing wrong with that. But I mean, if you want to refinance later on, just be careful. Yeah. But I've seen it, unfortunately.
It's gone down. Okay. How the Fed's raising the interest rate constantly every so often, does that directly affect the mortgage interest rate? Because I'm hearing both sides of the story. Some people are saying, no, it doesn't directly affect it. Some people are saying, yes, it directly affects it. So what's the real deal?
I think it does a little bit because obviously it's hard to qualify our borrowers with the higher interest rates. Okay. So in a sense, I would say it does a little bit.
You think media blows it up out of proportion a little bit too much?
That too. Okay. That's why it's very important. If you are looking into buying a property in the next couple of months, sit down with the lender. Make sure that you know where you stand. What do you need to do in order to be ready? And it's very important to get the knowledge that you need in order to buy a property.
Okay. Now, I know you don't have a crystal ball, but he said something very, very important, I think, earlier. Hey, if the rate goes down, refi your home later, right? What are your thoughts about that? How confident are you, or when do you think the rate will start trickling downwards?
Well, I mean, I'm not sure if they're going to go down. What I know that next year they're going to keep going up. I've been hearing that, but let's be positive. Let's be hopeful, and let's pray that they go down a little bit.
When you say they're going to keep going up, how much higher do you think they're going to keep rising to?
Well, I mean, I really don't know how much, but I just know that, well, right now, I mean,
What's that
compared
feeling?
to the beginning of the year, it's being almost a percentage. So probably in the 7, 8%.
It's gonna hover
Hopefully
around.
not, but that's what they're,
So
thinking.
7 and 8% you're thinking about for a regular single family home, right? What
Mhm.
about multifamilies for my investors?
Well, I mean, it really depends because you can do FHA, which the
Oh,
rates
if
are a
they do
little
it
bit
owner occupied, right?
lower,
Yeah.
but just a little bit higher, maybe
Okay.
half a point.
Point, half a point. Okay. Okay. So what is the current interest rate?
Well, right now, FHA is probably in the high fives,
Okay. This is
conventionals.
of September 18th, 2022, right? So for whoever's watching this video, whenever.
Yeah.
So,
And
okay.
and we're talking about, the rates are case by case. Has to do with credit, what type of property, how much down payment are you bringing in?
Yeah.
But roughly in the high fives for FHA,
Okay.
low six for conventional.
Okay. Okay. Low six for conventional, high
Mhm.
fives. Okay. So, rate buy down. Can you tell us what rate buy down it actually is and what it's all about?
Yes, so you can buy down your rate to lower your monthly payment.
Okay.
But
Layman's term, what does that mean?
I'm sorry.
Layman's term, like what does that mean? Like I have no industry knowledge. I like what is
And
that? What those two
yeah,
words?
and that's one of the things because people usually ask me, how much is it to buy it down? Well, it really depends on the pricing of that specific date.
Okay.
So you can probably buy half a point, but it really depends on the pricing of that day.
Okay.
Sometimes it can be a couple of thousand, sometimes it can be a couple of hundred, but you can buy down the rate if it makes sense. Sometimes it doesn't make sense, to be honest with you. We'll be looking at pricing, and you're probably going to spend $5,000 buying down your rate, and it's only going to make a $40 monthly payment difference.
Mhm.
Again, if you're planning on staying in that property for more than 5 years, it probably makes sense.
Okay.
But if you're not going to stay in that property for more than 5 years, I wouldn't advise
So
doing that.
I'm sure you have a software or a graph that shows the break-even point of when or on how much you pay to bring that rate down and how much your payment drops. So I'm sure you have that, right?
Yeah, we do have that.
Okay.
Whenever we're checking pricing, I always compare, and I always tell my clients, this is how much money you're going to save, and this is how long it's going to take you to break even.
So for rate buy downs, let's say it's 6%. I want to buy down to 5.5% on depending on what day it is and what the pricing looks like. It can cost me anywhere from X dollar amount to a few $1,000s.
Yes.
Right. Okay. That makes more sense. I know you work a lot of agents. You do a lot of transactions out there. So are you seeing closing costs making a comeback in the industry?
Absolutely, yes. I've been seeing that 2%, even 3%.
Really?
And I'm seeing that now.
How often are you seeing that?
I would say a 40% of my transactions, I've been seeing that. Mm-hmm.
Wow. So
Yeah.
4 out of every 10 transactions is getting closing costs.
Yes, I got 2 escrows last week, and both of them had seller credit.
Wow. What dollar amount?
One was for 2%, and the other one was for 3%.
Now, do you know if these were at list price or did they increase that price to?
No, they did not. It was a list price, and they're not offering anything above appraised value.
Wow. So it sounds like contingencies are back, appraisals are back. Okay, inspections are back.
Which is really good for buyers.
Yeah, I think it's a fair ground, right? I think all the contingencies should stay in place just to protect all parties. In my opinion, the 17 days is enough time. I think it's fair. I don't know how I feel about. I work with a lot of sellers, and my thing is, I don't know how I feel about the sales price staying the same and still asking for closing costs, right? But it's not about how I feel. It's about the market, right? If market takes the sales price, the closing cost, the interest rate, the whole 9 yards. So that's what it all boils down to. So, it's just the market, right? So favorite loan product and what type of loans are there?
Okay, so we have all types, anything that you can think of, we have it. Yeah. and that's the beauty of being a broker compared to a direct lender.
So a broker and a direct lender. So give me examples. Like, what's a direct lender?
A direct lender, they
Is that like Bank of America or Wells Fargo? It's
yeah.
like big
So they
bank.
have their own underwriters. They work with that specific team. They can only offer you what they have.
So that's direct.
In-house. Yes.
Okay.
Compared to brokering, I have more than 25 banks that I work with. So instead of the client, clients like to shop around it, which is great. It's smart to do. But instead of the client going from bank to bank, running their credit, looking for the best product or the best rate, I do that for them with one credit report. So, and then we offer tons of programs. We do have obviously the regular FHA, conventional VA, USDA, down payment assistance programs, but we also have bank statement only. I have a bank statement program for self-employed people.
What is that? What is that bank statement program?
Well, let's say you are a business owner and you don't report enough income on your income taxes.
Yeah. Typical story of every business owner's life.
Exactly. Who doesn't like to save, money on the IRS?
Who likes to pay taxes is the correct question.
Yeah. Right? But you get your deposits on your bank statements. So we go based on the deposits that you receive monthly on those bank statements. And we only use 3 months bank statements. We can do 12 months or 24 months, but we also
do these deposits have to be seasoned, or they can just like start taking that mattress money?
Well, if we have 3 months of bank statements, that's all we need.
Okay.
Mm-hmm. And then obviously we're going to need a CPA letter stating that those deposits are standard, but that's, we work with that.
Okay.
We educate the buyer on how to get those items. So we have those. We have ITIN loans for the people that don't have a social security program. People with no social can buy a house. We offer those programs. We have cash flow for investors. Again, if you don't report enough, we can qualify you with obviously a good credit score and the rental income for the property that you're buying.
Okay.
Mm-hmm. And we have hard money loans as well.
Okay. We'll define hard money loans. I know what it is, but tell,
Right. So hard money loans, those are private loans. It's going to require a higher down payment.
What's that number? What's the higher down payment?
Probably 20 to 30%, depending on it's a case by case. We don't check credit. You don't have to have credit, no income, but just know that obviously the rates are going to be higher. We're talking about probably 9 to 10%. Now, you can always refinance. You can always refinance later on, and we can do a 30-year mortgage on those too. So
hard money loan. So I think that's a good program for somebody that's flipping homes, maybe, perhaps.
Yes. Mm-hmm.
Okay. Or someone's just in a bind and need to buy a property right now.
Yeah.
Don't have everything penciled out, and they can get that loan and get it all penciled out.
And another good thing about those loans is that there's no prepayment penalty. You can pay them off whenever you want.
Okay. So what's your favorite product?
The bank statements and ITIN loans. I think I really like the ITIN loans. They're a little bit more difficult, but
more rewarding is what you're telling me?
Yes, and I've been getting really good at them. I think that's one of my favorite products, and obviously the bank statement only too, because after hearing the stories, I got denied with that other lender, and I went to 2 different lenders. They couldn't qualify me, and they come to me, and I'm able to do a 3-month bank statement. It's like, okay.
Yeah, that's home run, right? That's a home run.
Yeah, absolutely. And then your clients love you, so.
Right?
Mm-hmm.
So let me ask you this, right? The market is extremely touchy. Interest rate goes up and down. Inventory is rising. People are seeing sales price drops. Concessions are coming back. Is it a good time to buy a home right now? Like, I'm going to ask you, hey, Damaris, if you were to buy a home, or you've been wanting to buy a home, would you pull that trigger right now?
Well, again, it's a case by case. What is good for you? Can you afford the payment? Do you feel comfortable buying a house? Because again, if you're paying rent, it's always a good time to buy.
Okay.
It's always a good time to buy. But again, if you're paying $800 for rent and your mortgage is going to be $3,500, you kind of have to know, okay, is this convenient for me at this time? It's a case by case. But if you have your credit, you have your assets, you have your income, and you have your family that you need to give them a home, why not? Why not build assets? If you're paying for, let's say, a car payment for $1,500 a month.
Right.
You're paying for a car. I mean, it's a liability. Yeah, you're driving a nice car, but how much time are you spending in your car?
Well, my thing is it doesn't appreciate, right? I mean, it doesn't appreciate. It's not a write-off, and well, depending on how you want to look at it, but it doesn't appreciate. I know that for a fact.
Yeah.
Well, actually, recently, car market has been kind of crazy, but in general, rule of thumb, I don't think automobiles appreciate as much as a house does.
As
right?
a house.
So let's, so basically, let's say I want to buy a house, but I'm just not ready to talk to a loan officer yet or a real estate agent. And I want to figure things out in my head. What would be a general rule of thumb on like how much house can I afford? Like how can I pencil that out?
How can you calculate your payment? Well, yeah. So what you're gonna do is, let's say you have an income of $3,500 a month, gross income.
$3,500.
Yeah, you're gonna.
So gross is tax before taxes, insurance.
Before taxes. So whatever. Yeah. Okay, so you have an income of $3,500 a month.
Okay.
You're gonna take 50% of that. Let's do the numbers really quick.
50% of that.
So let's do 3,500.
1,750.
So that's 1750. Let's say you have 2 credit cards. Your minimum payment is $25 a month for each. So that's minus $50.
Okay. So
let's say you don't have
no car payment.
Let's say you don't have car
keep it simple.
car payments or just the 2 credit cards. So you have $1,700 for your mortgage, including taxes, insurance, including interest, and principal. $1,700.
So that's how much monthly, and what does that equate to how much house in dollar amount?
I would say, well, right now how the rates are, like around 240.
Okay.
Yeah. But okay, another thing, like you said, if you're not ready to purchase in the next in the next couple of weeks. But it's always good to sit down with the lender. It's totally free. We don't charge for consultations. Okay. So it's always good to have that knowledge. It's always good to know where you stand, and it's no obligation.
Okay. So now let me shift this question something a little bit more for people that are looking to get into lending or real estate. You've been doing it for some time. What advice do you have for somebody who's thinking about jumping into the lending world and want to start helping clients buy or sell real estate?
Okay, so the first thing that you need to know is that you're gonna work hard if you want to be successful.
Define hard.
You're gonna be working probably between 10 to 14 hours a day.
Yeah.
You're probably going to be working 7 days a week. If you really are looking at this as a career, not as a part-time. If you're looking into a part-time, I don't think this is the industry for you. You're not going to be successful.
Okay.
So yeah, just be disciplined, be ready to work hard, and never stop learning. I always tell people, if you want to get into the business, don't just focus on passing the license, the test to get your license. Keep learning.
Yeah, I mean, I'm sorry to cut you off, but I think before we started, you said you just picked up on a new course, right, and related to lending.
That is correct. So an underwriting course, and not that I want to be an underwriter, but you never know. But just to have the knowledge, I want to think how an underwriter thinks, so I can service my clients better. Okay, so I want to have the knowledge of an underwriter. So
you're just going to be more prepared when the file comes to the table, and it's just going to be it's going to be a solid file when it goes into underwriting, is what you're saying.
Yeah. So for lending, in my case, because that's what I specialize on, there's so many programs out there. Yeah. There's so many courses that you can to help you keep learning. There's processing, there's underwriting, anything that you can think of. It's just wanting to do it, taking the time to do it, and again, this is to service your clients better, and your business is gonna do better.
Yeah, I absolutely agree. So look,
because who doesn't want to work?
Yeah, go ahead.
Who doesn't want to work with someone that knows what they're doing?
Oh, absolutely. I mean, I 100%. There's nothing wrong with having more knowledge, knowing what's going on in the market. I think you're just more equipped, right? When a client comes to you with a question, you're in a position to answer those questions right off the bat. And it's a professional and the right thing to do, in my opinion. So absolutely. Well, you said consultations are free, right? People should sit down with the lender if they're thinking about buying, whether it's not right off the bat or like tomorrow, or if they're 3 months out.
Mhm.
So, I want to wrap this up. So if somebody wants to get a hold of you, what's the best way to reach out? Email address, phone number. I mean, I'll plug your information into the description. But yeah, just why don't you put that out there as well?
Yeah, my phone number is 661-416-7065. You can text me, call me. You can email me at damaris@dreamhouselending.com.
Okay.
Yeah, text me anytime. If you text me late at night, I'll probably get back to you in the morning. Call me, leave me a voicemail if I don't answer the phone, because I might be with the client. But yeah, just
It's
don't
either
be
you're with
afraid.
the client or you're sleeping, right? And one of those two reasons you're not answering.
Yeah.
Okay, fair enough. No, well, so look, if thank you for your time. I really appreciate it. I'll plug your information in. Once again, everyone, my name is Alex Daredia. I work in Bakersfield. I help people buy, sell, invest in real estate. And if you have any questions, whether it's in regards to purchasing, investing, or a simple lending question, reach out to either one of us. We are more than happy to help you out, and we'll talk to you soon. Thank you.
Have a good day.